Three, two, one, and we're live. Welcome to this our first reasoning session. My name is Ajam Muhammad. This is my friend, good friend Jerome. Jerome, could you give us a little intro about yourself?
Thanks for having me, first of all, Ajama. Um, as Ajama mentioned, this would be a reasoning session and a little about myself. Well, I would consider myself an avid reader, first of all. And outside of that, I'm just a person naturally who is hungry for knowledge and just experiencing life as it comes, applying the knowledge that would have garnered through reading and just taking it to the real world and taking it in terms of having that practical experience and garnering um, wisdom from same. So it's technically that, and the discussion that we should be having today is something in my niche per se, which is stock market investing. So, in a nutshell, that's me, and that's what our discussion today will be centered around.
Interesting. So I would like to ask firstly, what got you interested in the stock market, and how were you introduced to the stock market, and what market are you currently involved in investing? What markets?
All right. Let me begin here. I've been tracking the stock market for quite a while. I've been a bit apprehensive in terms of really entering the market. When you don't have that real experience of the value that the market itself can impose. The market that I'm currently involved in is a JSE, which is a Jamaica Stock Exchange. What got me interested into the market is reading. So I saw an article about 3 years back, 3 to 4 years to be exact, where Jamaica was dubbed
Yes.
the best performing stock market in the world. That really piqued my interest, with the research that I would have been doing already and getting into really setting up an account and taking it from there was how things progressed. So I went into the
You
market
get it
and
out.
I'm going to be sorry, I didn't hear that. Go again.
I'm saying you took it out of the theory into the practical because of the article you read that said Jamaica was one of the number one performing stock markets, and that I think was in the year 2018. I'm familiar with the article as well.
Right. So as I was saying, getting into the market now, I went without any real knowledge of what I'm getting myself into. So it's really like just getting your feet wet and stuff like that. So I went straight ahead into setting up an account. So I would have went to a broker, which in this case would be VMBS. So that's for the new investors or persons who are interested in getting into the market. That's something that we'll discuss as we get into this conversation that you would need to engage a broker to get started. So to put it in a nutshell, um, a small country like Jamaica to be dubbed the best performing stock market in the world, it really piqued my interest, as I said, and I had some knowledge from the research that I would have done, got the account open, bought my first couple shares. I started off with RJR and I started off with Mayberry Investment Limited. And that's pretty much how I got involved in the market. Just jumping in head on.
Yeah, but you said something that sparked my interest. I said before you read that article, you were already learning about the stock market. But how did you come to be interested even before that article? Because myself, I was already aware of the Jamaica stock market. I was aware JMMB and other financial institutions that offer stock option. But what led you to do that research even before that article came out?
All right, so good question there. I'm a person who believes in being free in a sense of being in control of the decisions that you make. Um, so with that type of thought process, I was always interested in building multiple streams of income or MSI, as some other persons would call it. I saw the stock market as one of those vehicles that could be another source of income due to the fact that it is very intricate in terms how you make money, right? And I know we're probably getting ahead of the conversation, but just to briefly touch on what I would have learned before I started the market, I would have known that there's two main ways that you can make revenue from the stock market, which is one, through capital appreciation, which is the nominal value and the cash that you would have invested. To put it in layman's term, if you invest, for instance, $1,000, over time you're expecting that $1,000 to increase, probably for argument's sake, within 2 years, it doubled and it went to $2,000. So that is capital appreciation. On the other hand, you have dividend yield, where it is basically a percentage paid from the company on the profit that that company would have made, and it's paid based on the number of units that you own in that company as an investor. So basically, that's another way of how you can make money. And again, through dividends, the dividends is separate from the cash that you'd have invested. And to cut it short, most companies normally pay out a dividend quarterly. So again, I got involved because of the interest of building another source of income. So yeah.
Okay. I see you're getting a lot in the nitty gritty, in the depth of what we're talking about, because a lot of people will know, but I'm going to introduce myself. I'm a entrepreneur, operate currently a restaurant, a gym. I will do health, wellness, a lot of services. And I'm always interested in getting multiple sources of income. Now, my friend Jerome here was involved in stocks, and I said, hey, would you like to take a look at this? And I look at it and it sparked my interest, and I just went straight in. He basically did most of the mistakes already and showed me what he did, what not to do, what recommend. You still have to get your own toes within it and make your own fair share of mistakes. I dabbled into trading and all of that. But before we get into the technicality, what is a stock? We need to know what is a stock first, because we're talking about the stock market. A lot of people might not know what is a stock.
All right, sure. And as a famous quote would go, a stock is not a lotto ticket. And what that basically means is you don't look at owning as a stock as if you're buying into the lotto or you're going off luck based on thinking that, all right, if a company goes up, I make money. If a company declines, that's how I lose money. You can get involved in stock with a knowledge of knowing exactly what will happen. Now, to answer your question, a stock is basically something that we call in the financial arena equity. So it's basically you as an investor owning part of whatever company that you would have invested in, and that's you investing in intrinsic value. So again, a stock is part ownership of a company, and that's as simple as it gets.
Okay, okay. All right. In the stock market, you said there are two ways to make through capital appreciations, capital gains, in which you said that you can buy it at a price and the price goes up. what if the price of your stock goes down? What would you do in that case? Or what if you purchase a stock and you find out the dividend paid or the dividend yield is not what you would have expected? What then? What would be your advice for new investors in those scenarios?
All right. So before you even think about putting your cash into the stock market, you need to have an ideology of what type of investor you're going to be. So there are different type of investment strategies. You can do day trading, and I'm going to explain what that really entails. Day trading is something pretty similar to what you would have asked based on the type of mindset you would have to implement that type of strategy. So in that case, you're really looking at a stock going up or a stock going down in terms of its price or its value. So as a day trader, you would have asked if a stock went down, what would you do? If I'm a day trader, I would technically wait for the stock itself be valued more than what I would have valued more probably in a week, probably in a day. That's the whole strategy behind day trading. Now, on the other hand, in contrast of day trading, you have value investing. That's the strategy I'm more aligned to. And what that strategy really entails is you investing in that intrinsic value of the company. Intrinsic value means it in itself having something more than it's the price tag that is associated to it. It could be in a sense where you have some resonance to the company. And let me get more practical. For instance, separate than the Jamaica Stock Exchange. If you're somebody who uses household products, or you're somebody who probably owns a corner shop where you buy like
Like,
products like Busters, water, biscuits. Separate is in the
yeah,
manufacturing industry, right? So those are stuff that you would use on the day to day. You have that basic knowledge of the fact that these are products that people continue to use, then you realize that a company like Separate holds intrinsic value in a sense that even what is happening now in the pandemic and a lot of companies losing revenue, you will find that a company like Separate is still thriving because again, the products that it manufactures is something are things rather that are essential. So being a value investor, you invest in a company's value, which is in its intrinsic value. And also another thing that you would want to know if you're interested in that type of strategy is value investing normally involves you holding a stock over a lengthy period of time. So, in contrast to the earlier strategy that I would have mentioned, which is value trading, where you're looking at the day to day to see the movements in price or nominal value of the stock. When it comes to value investing, you're probably just plugging in your cash in. You already have a time frame of how long you probably want to hold a stock for, probably a 5 year period, and you have increments in terms of how often you're going to invest in that company. You know exactly how much you will be plugging in at that specific time, and practically you're not looking to sell. On the other hand, you would have also asked about dividends. While you're holding a company or a share or a stock, you're also expecting to invest in companies that pays out dividends, and that's you collecting a dividend probably quarterly based on how the company pays out, and that is income that is being generated while you're investing in the value of the company.
yeah. And another thing that can happen too, These companies that pay dividend can also grow in their nominal value. However, with the approach you use, you would not necessarily sell that even though the increases or decreases. So you'd have to know what you're doing based on this strategy. So you'd have to pick one or the other, or you can use a hybrid approach as well. You could sell some. What is your take on having a hybrid approach to it in terms of you have some stocks that you keep, or you keep a portion and you trade off another portion? Is it easier to just stick to one category, or is it necessary that you can successfully do both trading and investing? Because it's two totally different mindset. So how would you approach that?
All right. So for a starter investor, my advice would go with one strategy and get comfortable with that strategy. And then over time, you can make that decision if you want to incorporate other investment strategies, as you would have mentioned, doing trading and investing at the same time. It can work and it can prove to be very much fruitful. But again, I would encourage the first time investor to go with one strategy, get comfortable with it. But saying that you're advanced now and you're in the market and you want to use both strategies, just a quick tip to that is not to over diversify your portfolio. And what that means is that you typically don't want to own more than six stocks in one portfolio. Over diversifying means that you're reducing the risk of your stocks declining, but you're also reducing the reward of what you can earn from your stocks based on how much you're investing in those individual shares. Um, whilst
So it would be like
trading,
a trade.
right, right. And as I was um divulging into what you were discussing about trading, trading is another strategy in which persons who are really looking to earn income can earn income based on, again, looking if a company moves it with its nominal value on the day to day, probably weekly or monthly. Whenever you want to do a trade off or you want to sell your shares, you're just looking to see from the price tag that I would have purchased, did it increase? Do I want to sell at this point and make an income from where I would have made my purchase, seeing that there is some form of appreciation? So you can use both strategies, and again, look into either hold for capital appreciation or do sell off or trading to earn an income. So that's basically the strategy that you're going to want to have if you're going to be
Alright,
involved
very
in both
good. Alright,
strategies.
so yes, as an investor, you invest. But to say to a young person, imagine a person just leaving, for example, school. How would they begin to invest? They don't have a stream of income. How would they start to invest? What would you recommend? They start a business, or get a job, or just take a loan and go invest? Like, approach. Imagine somebody leaving college or leaving high school, sixth form, and they want to go in the market. Is it easier to get a job and invest, or to get a hustle and invest, or you need to get a job and a side hustle and invest?
Well, you know that it really depends on the individual's risk tolerance. And what I mean by risk tolerance is how many risk, or how much rather risk can you assume? And risk tolerance, this depends on a number of factors. It depends on your age, it depends on your knowledge, depends on your experience. Now, you would have mentioned clearly that this person is leaving school. How would they approach investing? Um, Again, going back to the risk tolerance, some persons are probably not comfortable with assuming a lot of risk even though when you're at a younger age, you should have a higher risk tolerance because of your age benefit or age being on your side. Then I would
Yeah,
say,
because you can make you. Oh, sorry, you can make utilization of compound interest and stuff like that over time, maximizing the amount that yield you will get over a longer period. Versus someone at the other end of the spectrum, probably pre-retirement, just looking for to retire. So you can also compare, in addition in answering this, what would you recommend to someone who is not investing until later on in life as well?
all right, cool. So let me just touch on clearing up the starter who is just leaving school, and then we can get into somebody who is um past certain age limit and just getting involved in the market. Well, I would say if you're going to take the safer route, I would say get a job first. If you're somebody who will prefer to depend or to have that comfort of knowing that there is a set income that you're going to get, probably it's fortnightly, probably it's monthly, and you want to take that safer route, and then you can then deduct the amount that you would invest from the income that you're receiving from a job, knowing that the job is there probably to cover your bills, to cover your day-to-day expenses, while you can take out of that same income and plug it in the market. On the other hand, if you're somebody who has a real high risk tolerance and you're young, you probably have some entrepreneurial background, probably your family members, probably your parents own companies, and you have some entrepreneurial knowledge, and you don't have a problem starting a small business or whatever type of business you want to start. You can also take that route, and based on the revenue your business pulls in, you can take from that and invest as well. And you can basically maximize your earning potential from the markets by plugging in again a portion of the revenue that you would have made, similar to what I would have explained earlier about the person who is taking the job route, who would take from their income and invest there. To answer that next part of your question, the approach of somebody probably older. I don't know what you're looking at, probably an age range of 40 to 50, like probably going into retirement. That type of age, I would consider it more of capital preservation more than looking at capital appreciation. Because if you're getting involved in the market at that age, I would have think that you would have accumulated some amount of wealth, or it might not even be wealth, but you have some amount of capital that you want to plug into the market at that time, and you're probably just going in to preserve the cash that you would have already had. So you would take safer streams in terms of the equity class that you're going to invest in. I know we've been speaking in lens and stocks, but you have other equity classes in the markets, which is, for instance, bonds, which is basically a loan. It could be a government loan like a debenture. That's just one term that we use to class those type of bonds, where the government probably puts out a loan for an investor to plug in X amount of money in that loan, and then there will be a fixed amount that they will get back at the yield or the age of maturity, probably a 1 year period, which most debentures or bonds goes up to. The person who is just getting involved in the market at that age again probably will take those options as a safer terms of investing and preserving their cash, wherein they probably have a lower risk tolerance based on age.
Good. So, all right, so we have advice for the younger person, for the older person, but for I'm going to shift back to the younger demographic now because we want to know, do you need a lot of money to invest? A person in their 40s or 50s, heading up to 60s, probably have their home already, most likely may have a car already. But for someone on the younger age spectrum, do you need a lot of money to start investing very important, very commonly asked question. How much do I need to start investing?
And that's an interesting point you brought up as well. I would say, from my experience, you don't need a truckload of cash to get started in the market. Of course, the amount of cash that you plug in will determine how much you pull out from the market. But if you're just starting and you're just getting your feet wet, what you first want to get from the market before you even think about making money on that type of level is experience. Right, as they would say, experience teaches wisdom, and that's the first thing that you want to get from the market, which is the experience. From that experience, you already put yourself in a position where you can maximize your earning potential. So, answering that question, I would say start off with whatever you have, which basically most brokers for the Jamaica Stock Exchange probably will require an initial investment amount of 10,000 to 15,000 Jamaican dollars to get your account set up and to buy your first couple of shares. So that's also a real life example or expectation of what amount you probably would need to get yourself started in the market. And I wouldn't consider that out of the reach of most persons to get that um, that account set up. So again, you don't need a truckload of funds. You want to get the experience first, so you start off with whatever you have, and over time, your capital that you earn outside of the market, probably you get a better job, probably a business that you started starts to pull in a lot of revenue where you can plug more into the market. So you're not going to wait until you get a better job or your business pulling in that type of revenue for you to start, because at that time when you're just starting, you might not have the experience. So you might still end up in a position where you lose revenue or you lose capital because of not having that experience, wherein if you had started initially, you would have garnered that experience to capitalize on you now having more funds to invest.
Okay. All right. So on to the next question. How would I know when I have invested enough in the market? That's all right. This is it. Or would I have to be continually investing? How would I know when yes, this I have arrived at my X point that I reach?
A lot
Or
of
how do you
that will
chart?
a lot of that will depend on your personal goals, I would say, because I would think that a person who is interested in investing is somebody who probably have their life well planned out, because that means that you're venturing on a path where you really want to put things together. You're thinking about the future, right? So in that sense,
Not,
then
not necessarily. Not necessarily. You can assume that, but from I was small, I always thought about investing. I didn't necessarily have an outcome, but I always thought it was a very cool thing to do and a very good thing to do. But I'm saying, all right, you can put the horse before the cart. All right, so you invest in the market and you invest say $100,000, and your goal is to reach $1 million. But with all the strategies that you told us, with the capital growth and the dividends, you wouldn't have to constantly be investing. It's always better to over allocate resources. But if your goal is at a cutoff point, how would you chart that to know that within this amount of time period I'll reach that goal that I've set?
all right. So basically, what I am ascertaining from what you're saying is that you would have already have an idea of where you want to get in terms of
Exactly.
how much cash you're allocating into the market, and then you want to know how would you now decide that this is my cutoff point. This is a point where I am just allowing whatever cash that I've plugged in to continue to grow and not necessarily plug in more cash. One interesting way of reaching that cutoff point is knowing again what type of companies to invest in. So you want to diversify your portfolio, but you don't want to over diversify the portfolio at the same time, which means if you're going with the benchmark of 6 shares in your portfolio, you're going to want to have a mixture. So you want probably out of those 6 shares for it to be 3 or 2 to 3 dividend yielding, 2 capital appreciating, and you probably want a debenture or a bond in it. In that case, you're making income from your dividend yielding. Your capital appreciating stock will basically increase the value that you'd have invested, and then your bond will give you a yield determined already before you even plug in the cash, which means, for instance, if it's going to be a 15% at the age of maturity, which is probably a year, you know exactly what amount that you will get. Basically
Okay. That's what.
here is can also reinvest those dividend yielding stocks, and in that valued by X portion of time.
I'm not sure it's on my end, but you're breaking up a bit. All right. On to how do you know that the market that you're in is safe? What if an next country overthrow the government? What if an internal sovereign state, for example, wants to annex Jamaica, or external sovereign state want to annex Jamaica? Or what if there is a pandemic per se? What if there is a rebellion? What if there are external? How do you know that your assets are safe in the particular market that you're in? How do you guarantee the safety of your money?
All right, so each stock market normally has a regulatory body. If we're speaking specifically to the Jamaica Stock Exchange, the regulatory body of the Jamaica Stock Exchange is the JCST, right? And the Jamaica Central Securities Depository is basically that regulatory body which ensures that trading, investing is being done fairly on the side of the investor, on the side of the broker, and it ensures that one can conduct their transactions securely. Also, to note, the JCSD protects your capital that you'd have plugged into the market. The last time, on based on my research, is up to $1 million. You can go ahead and correct me if I'm wrong on this case in terms of conducting your own research. But again, there is that regulatory body which ensures that things are being done fairly, transactions are being done securely, and as you would have mentioned, precisely, your external things that might impact the market, and you need to have that knowledge of things influencing price movements. For instance, you mentioned a war or anything like that, that will naturally influence price movements in the market, and it's not just subject to the Jamaica Stock Exchange. This is international. Whatever happens externally, especially when it comes to anything government related, it could be policies that are implemented that might influence trading outside of the market. It could be physical goods and services, and how that is influenced by policies implemented by government that will trickle down back to the stock market, because you have physical companies being traded on the market. So if there are policies that would impact or influence how a company operates, then it also influences how it operates in the market based on how the prices move. So you just have to have that
Yeah.
knowledge and be aware of those things.
Okay. Yeah, you said a very important thing is you always have to do your own research and cross check everything that we're saying because we're just average people on our journeys and we're sharing our journey with you. And always the research and investing is not for everyone because you have to have certain mindset in terms of the patience, the amount of consistency you have. Similarly with business, and nothing is wrong with having a job or trying to generate income in other ways, but we're just showing you the approaches that we're taking on our journey as well. So back to
Right,
what we were
and
saying. Give
before
us a
you go to that point, Ajam, a very important point mentioned. We are by no means experts in the only sharing our personal experience. So this is not so much theoretical, but what our practical experience has been so far based on our research and based on being involved in the market itself. We're just sharing our experience here. So again, just to echo Ajamo's point, is always good to do your own research.
all right. So most of our audience, as far as I know, are if someone isn't even born in Jamaica, coming into Jamaica market, give us some popular companies that we might know, or some that even aren't as popular, some that are doing well. Just to give you an example of what that we can look out for.
Well, as I would have mentioned earlier, Seprad is one of those companies that has been doing pretty well in the manufacturing industry. Carib Cement has been one of those long-term companies that has cemented its place for, not to use any pun in this case, no pun intended, but Carib Cement has really cemented their grounds in the market of being one of those companies that has been appreciating over time. NCB has been one of those phenomenal companies backed by a superior leader, as I would say, especially in Jamaican sense, being um, a business leader in Michael Lee Chin. He's led NCB to be one of those fruitful companies in the market. You have Mayberry Investment Limited that is doing pretty well in the financial sector. So those are like three companies that are doing pretty well in terms of saying that they're doing well now, and if they will do well coming next 10 years, next 5 years. It's all based on the external factors that might influence price movements, as we would have said initially. But for current standings, those are just three that I would have mentioned off the top of my head.
All right. And you spoke about other type of instruments such as debentures and so forth. But there are also other investments such as REITs and cryptocurrency. I wanted to give your thoughts on cryptocurrencies in specifically and the other type of assets that they can invest. What are your thoughts on cryptocurrency?
Well, as it relates to cryptocurrency specifically, again, I'm not an expert in this field. Personally, I don't invest in crypto. It's not that I wouldn't say things might not change over time and I might venture down that path, but currently, no, I don't. Excuse me. But
Okay,
again,
man.
as it
All right.
relates to crypto, though, basically, from my standpoint or my perspective, it's all about the level of security that the instrument provides. As you would have asked earlier, how does an investor know that when they're investing, their capital is secure? As it relates to crypto, I don't know of, and again, any somebody can correct me in the comment section, of a regulatory body that is organized to regulate the movements or any transactions being done in the crypto market. Again, as it related to value, no, or capital to be garnered or pulled out now, crypto probably is a good vehicle if you want to do day trading, or also it can have some value over time based on whichever of these virtual currencies will be the winner, because right now I'm just looking at it as a race, and it's probably a bet, or it's something that you can get lucky in. I don't know what's the intrinsic value, so I can't say which one of them intrinsically will be the winner. Is it Bitcoin or any other of these cryptocurrencies? So again, I wouldn't be the best person to basically give the investment advice as it relates to crypto. But that's
I
my
would
take
tend
on
to
it.
agree with a lot of things that I tend to agree with a lot of things that you're saying because for me personally, I don't see what's behind it. I know that they can make a lot of money in it if you get in the good at the right time and so forth. Because right now they're carrying a thing called NFTs and the metaverse and everything. And I'm saying these tokens are like JPEGs. There's no value to it rather than what you put into it. But we're wrapping up the show, the first reasoning session, and we have many more reasoning sessions in the future. Before we go, would like to discuss on any other thing we topic you'd like to touch on. It could be relevant or sports. In the last 3 minutes or so, what other topics we'd like to discuss? Any current events? Anything new?
Well, outside of everything that we would have discussed at first, I want to say that this being our first reasoning session, again, I know that everything probably wasn't perfect in terms of audio quality, but over time, I know that we will iron out these things, and I hope that whatever we'd have just discussed added value to you. Um, as our listeners, as it relates to other topics now, I'm looking forward to see how our reggae boys perform, in the upcoming World Cup qualifiers. So that's pretty much what I'm looking at. I know that the team has been, well, they have been having a tough look as it relates to how the qualifiers have been so far. I think we have one of the best crop of players that we've had in a long time. So I'm just really looking forward to today's match against the Panama team and see how our boys perform.
I've been supporting Reggae Boys a long time since the 2010 World Cup campaign. This is the most impressive side I've seen on paper, but they don't gel. And I bring them out. I always support the boys, but I think I'll just call it a day. Call it a day for them. If they have to take out a scientific calculator, do some trigonometry, and pray, everyone is praying, and we probably have less people praying than the other teams. So this is the end of their campaign as well as this is the end of our live. Jerome, thanks for coming on to this our first reason second session, and thanks for watching. Please press the like button.
Man, my respects for having me.